Hey there, so you formed an LLC and now you're wondering, how exactly do I pay myself? Well, you're in the right place because today I'm going to walk you through everything that you need to know about paying yourself as an LLC owner. I'll cover the different methods, tax implications, and how to do it properly to stay compliant with the IRS. Let's start with the basics. When you own an LLC, there are actually two main ways that you pay yourself, through an owner's draw or a salary. Which one you choose depends on how your LLC is taxed, and this is really important to understand from the beginning. If your LLC is taxed as a sole proprietorship or partnership, which is the default for most LLCs, you'll pay yourself through what's called an owner's draw. This is basically transferring money from your business account to your personal account. It's pretty straightforward, but there are some important things that you need to know about this. First, these draws aren't considered salary, so no income tax is withheld when you take the money. Instead, you'll pay taxes on the LLC's profits through your personal tax return. This is called pass-through taxation because the business profits pass through your personal taxes. You'll need to pay self-employment taxes, which cover Social Security and Medicare, on these earnings. Currently, that's about 15.3% of your net earnings. Now, if your LLC is taxed as an S-Corporation or C-Corporation, things work differently. With S-Corp election, you can pay yourself a reasonable salary and take distribution, which can potentially save you money on self-employment taxes. The salary portion will have regular payroll taxes withheld, just like any other employee, but the distributions aren't subject to self-employment tax, only income tax. This can be a significant tax advantage, but you need to make sure that your salary is reasonable for your industry and role, or the IRS might come knocking. So how do you actually go about paying yourself? Oh, let me walk you through the steps. Step 1 is to open a separate business bank account if you haven't already. This is absolutely critical for maintaining the corporate veil that protects your personal assets. Mixing personal and business finances is a big no-no and can jeopardize your limited liability protection. Step 2 is to decide on your payment method based on your tax structure. Like I mentioned, sole proprietorship or partnership LLCs will use owner's draws, while S-Corp or C-Corp LLCs will use a combination of salary and distribution. Step 3 is to determine how much to pay yourself. This can be tricky for new business owners, but you want to make sure that you're taking enough to cover your personal expenses, but not so much that you're draining your business of operating capital. A good rule of thumb is to leave just enough in your business account to cover at least 3 to 6 months of expenses. Step 4 is to establish a regular payment schedule. Many LLC owners pay themselves monthly or bi-weekly, similar to a regular paycheck. This helps with personal budgeting and makes your business finances more predictable. Step 5 is to document everything properly. For owner's draws, record each withdrawal in your accounting system as an owner's draw or distribution. For salary payments, you'll need to run these through payroll, withhold the appropriate taxes, and issue yourself a W-2 at the end of the year. Now, a common question I get is, how much should I pay myself? There's no one-size-fits-all answer, but here are some factors to consider. First, what's your business revenue and profit margin? Obviously, you can't pay yourself more than your business makes. Second, what are your business needs? Make sure that you're leaving enough money to cover expenses, taxes, and future growth. Third, what are your personal financial needs? You do need to pay your bills after all. And finally, if you're taxed as an S-Corp, what's a reasonable salary for someone in your position in your industry? Speaking of taxes, let's talk about some tax considerations. If you're taking owner's draws, you'll need to make quarterly estimated tax payments to the IRS since taxes aren't being withheld from your draws. These are typically due in April, June, September, and January. Mark those dates on your calendar because the penalties for missing them can add up quickly. Also, keep in mind that as an LLC owner, you might be eligible for certain tax deductions that can help reduce your overall tax burden. Things like home office deductions, business travel, health insurance premiums, and retirement contributions can all potentially be deductible. Now, if you're thinking about starting an LLC to take advantage of these benefits, then I highly recommend using Northwest Registered Agent to help you form your LLC. I've used them personally for multiple businesses, and they make the entire process incredibly simple and straightforward. If you click on the exclusive discount link in the description below, you'll be taken directly to their website. Once there, just click on the button to get started. They'll ask you what type of business you're starting, select LLC, and then choose where the state you are that you want to form the LLC in. After that, you'll name your company, specify the purpose of your business, and provide your business address. Next, you'll enter the members of the LLC, your contact information, and select any additional services that you might need, like getting an EIN or setting up a trademark. Finally, submit your payment, and Northwest will handle all the paperwork and filing for you. The whole process takes just 3 to 5 minutes to complete, which is why I recommend it to everybody. It makes starting your LLC super easy. One thing I really appreciate about Northwest is that their privacy protection is so good. Unlike some of the other services, they don't sell your information, and they actually serve as your registered agent, keeping your personal information off public records. So to wrap things up, paying yourself as an LLC owner isn't complicated once you understand the basics. Choose the right method based on your tax structure, establish a regular payment schedule, keep meticulous records, and make sure that you're setting aside enough taxes. Remember that the way you pay yourself has significant tax implications, so it's always a good idea to consult with a tax professional who can give you advice tailored to your specific situation. If you found this video helpful, please hit that like button and subscribe for more business and entrepreneurship content. Drop any question that you have in the comments below, and I will do my best to answer them in a future video. Thank you for watching, and I'll see you in the next one.